Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we've had a pretty interesting market here with things like gold that have been subdued, starting to break out, and a few other changes. But one of the things that I'm starting to think about is what's 2022 going to bring to us. And so I wanted to cover that off today in this Market Buzz. And I've got a really interesting perspective. I hope you'll enjoy it. I actually was surprised at all of the things that are changing under the surface. And so COVID has changed the world. And we're about a year and a half on the backside of the initial outbreak of COVID, but we're really just kind of getting the COVID issues that came to the fore kind of behind us. But now we're starting to talk about different work environments and a whole bunch of other things. But there's big stuff changing just at the high level. And I think it's a pretty valuable perspective. So I'm going to share that with you today. It's a long-term view. I'm actually going to use quarterly charts, and I know we're in the middle of a quarter, but the reason to kind of notice what's going on here is as we move, let's say, to a post-COVID world, whatever that is, there's some really big indicators changing, and I think it's going to also help us avoid areas that might have historically been a good investment thesis and now all of a sudden are changing for one reason or the other. So I hope you'll enjoy this with me. There's lots going on here. First of all, I'm going to start with the sectors. And the reason I want to start here is this is a classic example, and write down while we're going along, just if you have a pen handy, just in a sketch pad, or write, the ticker symbol and whether it looks better or worse, and perhaps it'll help us as we go through here. So one of the big picture items is material sector, and I think we all know that the material sector has been different through the years. We've had things like the chemical companies like DuPont and that kind of stuff actually do pretty well and carry the material sector higher. And then we've also had the basic resources type of materials, copper, steel, whatever. Most of those topped out in 2011. But one of the big things that's changed as we go forward here is all of a sudden this material sector, it had really been kind of in a momentum phase, had been underperforming, and we had built like a 13-year trend line here, and that broke in late 2020 and continues to push higher. And one of the other things when we just look at these charts as we go along, up at the top here is my relative strength compared to the S&P 500. But what we're starting to see here is the big trend relative to the S&P 500 might be changing for 2021 or 2022. And if that's the case, that could meaningfully shift things. And so just as an example, through this period here, we were in a giant uptrend, and then we started basically a big downtrend in about 2011, where we underperformed the S&P. So this chart is still going higher, but the S&P was going up faster, or in this case, the material sector was going up slower. So when you're looking at this ticker symbol, if the purple area chart is headed higher, that's bullish, that's good for the sector. And if the purple area chart is headed lower, that means that it's been underperforming. Now, again, these are quarterly charts, so each bar is worth 3 months. The last bar right here is only worth about a month and a half so far. I'm recording this on November the 15th. And so the perspective is just to see what is going on. But I think this is a big clue for us here, that the relative strength of the material sector is actually on a big giant breakout, and we're just now starting to break out compared to the S&P 500. So on a given quarter, the S&P goes up, let's say 1% or 3% or 5%. The material sector is going up, 2%, 4%, 6%. It's going up faster than the S&P 500 is over a quarter. So January to March is what I mean by a quarter. So that sort of time frame. Again, once we get into the charts, you'll get the feel of it. But this is a really big surprise here for a 13-year trend line to be breaking out post-COVID in the materials sector. So that looks to me like it's a game changer for years. And you'll notice on these charts as we go forward, like when you get big major bottoms and major breakouts, there's some real, there's been some big winners off of that. So here's the communication sector going back to 08, 09. And what's really interesting is this chart is actually threatening to start underperforming the S&P 500. Now, we've had Facebook kind of pull back a little bit. We've had Google do really well. But anyway, I thought that this was a meaningful change here and something worth at least noting. And maybe it's a short-term blip. Maybe we're just going to come down here. But it's also something to be aware of, that if it's changing as we head through into 2020, because again, this bar is not finished being built for the quarter, what we want to know is if all of a sudden the communication sector, which was continually outperforming the S&P, stops outperforming, that's a real clue for us. And we can see on our momentum indicator, it's been sloping down. We recently turned up a little bit, but it's flatlined over the last 2 quarters. So it's a good place for us to just kind of question whether or not that's going to continue. Now, this is a real big one that I think could be the change for 2022. I think it could actually be one of the biggest surprises of the year. I know it was for 2021. I expect it to actually be a bigger surprise in 2022. And what do I mean by that? I mean that this chart has really gone nowhere for 15 years, since 07. We're heading into 2022. We're sitting right at that same level that we were at in 08. That's just amazing that this chart's really been that underperforming. Yet we use energy every day, and yet nobody values it. I think it's about to give us a real shock to the upside and make people start to respect the energy that we use every day, either be it through carbon taxes and high prices, or just through the change that we're trying to incur by taking everything away from the fossil fuel segment. That line's probably better drawn like that. Away from the fossil fuel segment and into, let's say, electric. And I have a lot of issues with just going to electric with no plan. One of the big things I think, rich people always have enough money to buy more electricity or more power. They might not like it, but they have the money. People who don't have the money, if we're going to go through an energy shortage, are going to get squeezed, and they're the people who could least afford it. So the big thing that I see on this chart, that I drew how it was going up, then across, and then down. We're just starting the energy. Looks like it's starting to outperform. This is a downtrend for 7 years of underperformance here. But this trend line, the 08 high, doesn't actually fit on the trend line. So I've drawn it in. Maybe that'll end up being resistance at the end of 2022 or something. But this momentum indicator is definitely turning higher. It's just given us a buy signal. And I think it breaks this big, giant 13-year downtrend. And we break out to the upside meaningfully. So if that was going to happen, that would be a very big change. I think people will really start to be respecting all forms of energy a little bit more. Looking in on XLF, this chart really hasn't outperformed the S&P 500 since the 09 crisis, but it hasn't really underperformed or outperformed. It's just been in line. So let's not beat it up too much. I will say the one thing I look for on my momentum indicators is this sort of big wave, and then you kind of get a touch point on your line. And then what we want to make sure is that this big wave continues to build away from the line and doesn't kind of do a short drop over here. And if it was to do that short drop, and again, it's over the course of the next year as an example, all of a sudden we're not moving towards the financial systems, and maybe that's due to Bitcoin changing the world, or maybe it's due to the decentralization of finance, whatever. It could be that this area ends up being quite adversely hit. So far, there's no break on the chart. There's nothing wrong here. It's sitting at higher highs. This is typically bullish. My big point would be that I want to continue to see this line stretch up and away from here and not really roll over anytime soon. So financials are still okay. The one thing I would say is, for people who have portfolio management, the banks are just performing in line with the S&P 500. You could just buy the index and get the dividend and probably be in the same range as being with the banks. Okay, and here's the industrials, and one of the big question marks for 2022 has to be what's going to go on with the industrials. They have been underperforming for 4 years, haven't really got it going on. We have a little bit of a higher low in relative strength here, and perhaps this can break to the upside. This has performed at a high level for a long period of time. But again, for the last 4 or 5 years, industrials have underperformed the S&P 500, meaning you could have just bought the index, SPY ETF, and outperformed owning an industrials group, or the XLRE in this particular case. So really quite interesting to see the change that's actually starting to occur in the industrials. And again, Boeing was kind of in here before the whole COVID thing. Then COVID hit pretty hard, and Boeing makes up a big percentage of the industrials. Not huge, but you have major spin-off businesses associated with Boeing. You also have the same with Lockheed Martin and with some of the other defense contractors. And so perhaps it's that area of the market that's still pulling down, and maybe we come through the financials and through the COVID crisis and we start to turn back up again. I don't know. All I know is this chart's been underperforming meaningfully for a while here. And if it does turn down at all and start to break this big uptrend, I think we want to be much more cautious. Not predicting that to happen. Technology's been a considerable winner over the years. There's no reason to not think that won't continue. It's flying well up and away from the major long-term trend over the last 13 years. And we see here the momentum indicator continues to go higher and higher, and it's way up at this 30% level. That's really big. There's nothing on this chart that looks like it's breaking. If it started to move below this 5-month moving average or 5-quarter moving average, maybe we'd have something, but we don't have anything right here. We touched it this quarter for the first time, and that was the September-October pullback, and then obviously started to push out of that in the beginning of October, and to me it looks like the chart's fine. This is another one, staples. A lot of people are trying to collect dividends to live off of. But the problem is that your money, while it's still going up, it's not keeping up with the rest of the market. So in this particular case, you can see that for a long period, the consumer staples was outperforming the S&P 500, and it was paying a dividend. Well, now it's doing exactly the opposite. It's actually underperforming the S&P 500 and really has since 2016. And the problem with that is unless your dividend is huge, you're actually losing quite a bit of ground to the S&P. So in this particular case, the momentum wave is up, then down, and briefly trying to go up here. What we don't want to see is a big trend line break here. So if I was to draw this on here, what I want to show is that this trend line sits here, and we do not want to see that crack to the downside. That would be a meaningful problem. And perhaps, as an example, let's say higher interest rates affected the consumer product segment for some reason or whatever. That could be something that would turn down here. I would expect higher interest rates to affect utilities more. Something like that might be more affected by that. But again, here's a defensive sector that's been underperforming for 5 or 6 years. So while it's still going up, it's going up a lot slower than the S&P 500 is. Okay, looking at the real estate, this one is a new news thing for me, that it's been a big downtrend in terms of momentum. So it doesn't, prices actually trended higher, but it's been in a downtrend in terms of momentum. However, we have something totally different to start 2021. We've broken out to the upside now, and maybe real estate's actually going to become a bigger play. So perhaps in an inflationary world, all of a sudden the real estate asset prices head up. And what was typically a big defensive sector could actually be one of the top outperformers. Now, we have some work to do on the other side of the chart here against the S&P 500. Just because momentum is improving, we're still sitting here with a bit of a declining performance on the S&P compared to the S&P 500. So again, relative performance. Something's going up 2%. This is going up less than 2% if it's declining, or more than 2% if it's advancing. So we need to be aware that all of a sudden, if this chart, let's say, starts to break down in relative performance, that could be a real problem. But more importantly, momentum is trying to improve here. So I actually want to be paying attention with the potential for all of a sudden real estate to surprise us to the upside in 2022. And then here's utilities, and we can see utilities lately have fallen out of bed. There's been no love there. Here's the relative strength trend over the last, since 05, 15 years or something. And you can see clearly that we were outperforming or performing in line at least. And then in the last year and a half, totally got wiped out. Now, perhaps it starts to turn back higher again. But to me, it's yelling at us to be very, very careful about being invested in utilities, because they're really underperforming, and in a dramatic fashion. This level's the lowest level going back to 04 or 05. That's real hard when you're underperforming significantly, and that break happened mid-2020, but we've been declining for the whole year since then. So a really big perspective change in my opinion. Now, another big change here is XLV, the healthcare, and it looks normal. I think, I don't know what to think on this one. What I'm worried about is the chart looks like it's set up to actually start breaking down and have healthcare underperform the S&P 500. And again, we're talking 7 years of underperformance. Now, this price bar hasn't been finished because we have another 30 trading days. But the real question we have to ask ourselves is, if this is starting to break down heading into 2022, are we going to see healthcare actually underperform? And is that the biotechs, or is it the future pricing regimens, or is it that the new drugs that can be coming through from mRNA technology are really going to compress the healthcare system? And that's something to watch, I think. And then when we look at the PPO momentum indicator, we have this big uptrend, but what we can see here is not a lot of lift away from that since 2020, unlike some of the other charts that literally started to climb right away. This is actually very weak. And for me, if this was to start to all of a sudden break this big uptrend in momentum, we want to be aware of that, because what was happening in healthcare here is it was really outperforming, and then we got to 2015, 2016, which, maybe it was the change in presidency or something that made that happen. But here we are at the other end of the system, and it now looks like it wants to start breaking down. So pretty odd situation for the healthcare, and I don't have an answer. I would just say we have to watch this very closely, because there could be some big decisions coming through in that chart, and we don't want to be blindsided by the big trend change. Lastly, from a sector perspective, we're going to get into consumer discretionary. Now, this has clearly outperformed. And again, Tesla in 2019 really started to take off on a run and is a huge component of that. Amazon's a big component in there. So with these major companies, what we see here is this momentum indicator has broken out to the highs. That's kind of what's been going on with materials, just starting to break out. When these big trends break, I think it's pretty important, and you can see here When we pushed above that line, this chart has really outperformed. It's outperformed the S&P 500. It's been super. So we continue to like consumer discretionary. So that's not really a surprise to anybody. But I think what's more important is that we're actually accelerating away here better than we have at any time in the last 5 or 6 years. And we've really started to take off. So people have money and they're starting to spend it on consumer discretionary. And this chart looks up and to the right. Okay. So that's kind of the big picture view there. One of the other areas that I thought was particularly interesting coming along here was the currencies. And the reason I say interesting is because obviously the US dollar is the big dog in the park, the 800-pound gorilla, whatever you want to call it. It is the big picture. Now, we can draw a few trend lines on here. And this one is particularly glaring. At the end of 2020, we bounced off this, but we're now moving back above the 5-quarter moving average, or 65 weeks. And then we have a downslope in momentum here, and it looks to me like it wants to turn and burn higher. If this is going to start to break out in 2022, where everybody moves into the US dollar, that would be a real kind of important trend change. So we'd actually... when the momentum indicator is above zero and pulls back, that's not a big problem. What we want to see is if it actually re-engages above zero and turns up, much like we saw on the materials and on the consumer discretionary chart, just the last one there. As this starts to break out, that could be a real clue of a lot of power in the US dollar. So we need to watch that one closely. The Canadian dollar typically follows crude oil, and one of the things that we're noticing on this one, again going back to the '08 high, which was crude oil's high as well, but the Canadian dollar has been underperforming for 13 years. So for snowbirds who like to go south, this is actually a pretty bullish sign that the Canadian dollar is going to be more valuable. And actually, this chart is looking like a big breakout in 2021 and could be headed for higher ground. Now, if we actually get into the chart and do a little bit of technical drawing here, what we see here on this chart is some pretty big resistance at 82.5. If we go back to history and just draw that chart along here, the 08-09 crisis, we closed slightly below it in late 08 and in the first quarter of 09, which also marked the major stock market bottom. But then we ran up, and then as we rolled over, and again, as you start to go below this 5-period moving average, it's pretty important to be aware of the trend change. But we're coming up here to an important inflection point. If all of a sudden Canada is going to start to break out and break through that, that would match with the energy sector starting to break out that I showed on that first slide, because this one typically follows oil. So pretty big deal, I think, to get confirmation on the currency as well as on the whole sector. Now, looking at the Aussie dollar, there's not a whole bunch to love here. I will say that at least the chart is starting to break this big downtrend. If we were to draw a line, we'd go something like this. So that's a bit more bullish. But again, it's not quite as clean as the Canadian chart, where we've got a trend line that seems to fit a little bit better. At this point, I would say we could put something in here like this and just say if it could start to actually turn and get going above that level, but it really doesn't have an anchor point on the right, so I don't like it as much. When we draw a horizontal line on the Aussie dollar, it's a little bit like the Canadian, a little higher level in terms of, we were back down around the lows of 08-09 for the Canadian dollar, but on this one, we're up quite a bit higher. Anyway, we're sitting here around 77.5, call it 78 cents. You could make a hard line somewhere up here around 80 cents, and that goes all the way back to here. So if that was to happen, we also have a little bit of a technical change here where we end up building a head and shoulders picture. And then, we'd be looking to build some sort of right side shoulder over the next year. And then this actually breaks to the upside in a big way. So that's worth watching. I think if the Aussie dollar is going to start to strengthen to the US and the Canadian dollar starts to strengthen, both of those lean into basic resources and energy as bigger trade. So I think that's an important backdrop for 2022 is all of these currencies are starting to kind of confirm what we're seeing in the US sector breakdown. Swiss franc, I can't find anything to kind of plot on this chart. It's just gone sideways for 10 years, so I think it's a good one to just ignore. The euro, this one's quite crazy, actually. Big downtrend here. We briefly tried to break out in the backside of 2020, and then what did we do? We failed right away. Then we're down back below this 5-period moving average or 5 quarters. And so what I'm worried about here is this chart actually looks quite broken, and our PPO momentum indicator is still below 0. Now it's above our trend line, but it's definitely speeding towards the bottom side here. If all of a sudden the euro is going to break down, that's a bit of a surprise. But what it does do is it actually makes it quite bullish for European countries to export their goods, put a little bit more pressure against US exports as their currency rises. And so the cost in euros looks lower. So then they would actually increase their exports on that basis. So we're watching this chart quite closely. This looks like it could be at a big inflection point for the euro. The British pound, this one's been in a downtrend for 13 years, and I would just say it's just moving back below the 5-period moving average again after testing that trend line. It doesn't look like a great story here. It looks like the pound's about to get pounded. The Japanese yen, this one has been in a downtrend for a while. It just broke the 5-year uptrend line. This chart looks south to me. It looks like it's going to just keep going down and maybe even take out the 15 or 20-year lows over the next couple of years. So this chart looks weak, which would help the Nikkei stock exchange. But watching this, we're about to get a down signal cross here where we actually get a sell signal on the PPO. And again, you don't get many of those on these charts. Here's one way back here in 05. Here's one in 2012. This one wasn't very rosy. This one was really ugly. And this one looks like it's just getting underway. We've just broken the uptrend line. I don't know about the yen. I think that could fall hard. So that's a real surprise to me. Anyway, all of those things start to add up. I think one quick example. Here's the French market, and it's actually just breaking out of a big 13-year horizontal trend line and breaking to the upside. And so, as I mentioned, that euro breaking down looks to me like France is set to soar here and actually be one of the better performing countries. And then the second component is the DAX, and what's going on with the DAX. It hasn't broken this big trend line yet, but it's still trending up towards it. And we've got a big overhead resistance line that's in place. And we can see that Germany's continued to underperform the S&P 500 basically since 2015. So it outperformed for a long period of time, really went sideways for 10 years and now down for 5. If all of a sudden we're going to see the German stock market start to outperform to the upside based on the euro falling, that we should see that same breakout that we saw in France start to show up on this chart. And I think that meaningfully changes the game. So that's another one that is really, to me, a bit of a surprise. Now, I don't have time to go through the rest of the charts in here, but I do want to just point out the Canadian market just because it's on the border with the US. But we have the same breakout that we saw versus France breaking out of. And the difference is on this one, the Canadian dollar has actually looked like it's about to turn up and go higher. But look at this stock market actually starting to take off. So that looks pretty bullish for 2022. Here we go. Thanks for taking the time to join me at Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page or StockCharts On Demand. Thanks, everybody. Have a good week. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.